Ravi Dharamshi joins us. He's been quite vocal from months now that why he likes pharma, and his call's been his call has worked out like a charm for his investors. Ravi, good morning. Thank you for joining us. Ravi, how should one understand the news flow? Let's say the news flow which has come out for Dr. Reddy and Lupin last night, the news flow which has come a couple of days ago for Cipla. Why suddenly, for a sector where 2 years ago, where news flow was only bad, poor and pathetic, now it has become good, great and encouraging?
Good morning, Nikunj, and good morning to your viewers, and thank you for having me. Just like you set the context, Nikunj, this is what bull market looks like. Stock prices rally, good news follow, stock prices rally some more, and we keep building on the base, we keep building on what has happened, transpired earlier. So this started as an undervaluation, under-allocation story, quickly graduated to US generic revival and reducing regulatory issues, with an opportunity thrown in with most of the corporates around the world adopting China plus one strategy. Now the story has moved on to the next phase where suddenly drug shortages are developing and there are limited competition opportunities suddenly coming up, and Indian players who are well positioned to take advantage of this opportunities, which were optionalities till now, are suddenly materializing. So, as you rightly pointed out, not even 2 years. I would say even a year back, people were not willing to look at this space, and suddenly now, analysts are behind the curve, and we are in an upgrade cycle. They will constantly be in an upgrade cycle for the foreseeable future, is what I believe.
Okay. What, to your mind, is the right P multiple for pharma? Because every company has a different sectoral growth. Unlike IT, I'm just bringing a point out, Ravi, for our viewers there, where if TCS will do well, other companies will also do well, plus minus 1 or 2%. That's not the case in pharma. So how does one go about judging individual stocks? Because every company has a different factor. And what is the right P multiple, the threshold P multiple for pharma now?
Nikunj, we should not get fixated on a number. That will actually act like an anchor, and you will be left out of the opportunity. I empathize with the analysts, but I don't sympathize with them. Unfortunately, they are trapped in an institutional imperative, or you should not get trapped in an imperative that I will buy at 10 multiple and sell at 20 multiple. That is not how the real world works. We work in an uncertain and imperfect information world, while analysts they take an opinion only and only when everything's clear to them as to what is going to happen. So that's not how the real world works. So we are supposed to take a call in an uncertain world, and where there are potential and there are probabilities. And if the probability is anything above 60-70% with a huge potential, then I think you should leave some things to chances. Let's not you try to put a ceiling to this can rally till 15 multiple or 20 multiple. I have no idea how strong this rally is going to be. I have no idea how large this opportunity can pan out to be. It all remains on delivery. So I don't think a year back this China plus one strategy was such a thing. Now this API CDMO is witnessing one of the strongest tailwinds. Some of the companies are growing at 50% CAGR. Some of the other, even the smaller ones, will start growing at 20-30% CAGR. So, this is at this juncture. I don't know how long this opportunity lasts and how strong this opportunity will be. So, P multiple will be scratch, in our opinion. It will hold you back and it will stop you from investing in an opportunity where there is even from this point on, there is an opportunity. You have to look at your risk and your returns from this point on. So what is the possibility of an upside from this point, and what are the risks? Nobody can rule out a 10-15% correction. But if the potential over a longer term period is still above 50%, then your risk reward is still favorable, right? And that's how I would be looking at it, and let things pan out rather than put a number and try to decide pre-decide that this is where I'm going to sell.
Okay, great point. Ravi, so where do you think within the pharma one should take take a bet? Because pharma is a complex sector. You got biogenerics on one side, you got injectable on one side. Like you said, there is API, then there are some companies which are planning to move into the diagnostic space. There are some companies which would benefit because of API. There are some companies which are into bulk drugs. You got a Cadila which is developing vaccine. You got a Biocon which is moving towards biosimilars. Where do you think within the pharma space do you see a growth runway of next 2 or 3 years?
Absolutely, you're very right. There are so many buckets and there are so many opportunities in this sector. And at this juncture, I feel the strongest tailwind is in the CDMO API sector. But I feel from a longer term point of view, the juiciest story still remains in the complex generics. See, we don't know what opportunity tomorrow it will come up. We are still working with the information that we have today. As in, okay, some inquiries have started. Corporates all over the world are looking for an alternate supplier, and people are moving to put one plant in India or start sourcing more from an Indian supplier versus a Chinese, or for that matter, even an Italian vendor. And it looks like this story has at least a few years of runway ahead of it. So this definitely is a sector to look at from a longer term point of view. No doubt this markets have recognized it, at least few people have, and which has made the stocks rally in a crazy way. But so you can probably wait for an opportunity to enter, or you can take your bet right now and wait. If there's correction or consolidation, you can add to it if the story has improved further. But what the way to go about picking stocks is rather that choose the companies that are already present in most of the the leaders in the various segments. You can make a basket out of it. There is no way to say this will do better or that will do better. Make a basket out of it and see how things pan out. And you can adjust along the way that, okay, this particular opportunity doesn't seem to be playing out, or this particular player doesn't seem to be executing as well. Or you can continue holding as long as the execution and the opportunity both are panning out better than your expectations.
Fair enough. So, given the way we've seen some of these names play out in terms of performance and then news flow over the last few months and weeks in particular, Ravi, would there be a calibrated approach in terms of where you're seeing more of the opportunity, specific picks that you'd be looking at? Would you be realigning those views given all the action that we've already seen?
Right. So, see, just like I mentioned, the story has just graduated to drug shortages and limited competition. Opportunities which were being factored as optionalities are suddenly now coming to the fore. So just take a look at the pipe. Which are the companies where these optionalities are present at this point of time and market is not giving it a value? And those should be the stories where I believe that if you had assigned a probability of this is not going to happen, it is time to assign a little bit of probability. Okay, what if this happens? And if that happens, then most of the analysts look at Revlimid as one such opportunity, just where Dr. Reddy has settled. So it's such a huge opportunity, and there is now a possibility that it will not be an all-out competition, but it will be an orderly generalization of the opportunity. And if that is the case, there will be enough and more for all the people to go, have a share of the pie. So you just have to figure out where the data will be maximum, and that is the company to buy.
Ravi, you manage public money, and the compulsions of public money is that you have to invest, and you have to invest when the money comes in. Post this interview, if a client sends you a big fat check, he says, look, I like your views on pharma. Would you invest that check into pharma stocks which you own right now, or you'll wait for that 10%, 15% decline?
No, clearly, so the stocks have run up, and one has to be a little more calibrated in which stocks to buy and how much to buy. If we follow a very concentrated portfolio approach, and I can have 10, 15, 20% kind of weightage in one stock, and if that is the kind of weightage, I'm not going to give that kind of weightage to a new portfolio that comes in. But at the same time, do I believe that opportunity has further leg to run? Yes. And so I might give a smaller weightage and still continue holding on to these stocks. And maybe wait for a correction, consolidation, or some event to happen which might provide a better opportunity. So yes, I mean, I would calibrate, I would have presence in pharma for sure, because that is where the bull market is or the opportunity is. But at the same time, I would reduce the weightage to the stories that we've been holding on. The stocks have already doubled and tripled for us through there.
Just one more follow-up question, and then we'll not extend our appointment, which is that our understanding is that the US FDA right now is not coming up with any updates. Whatever inspections they've had, whatever updates they wanted to share, largely because of this COVID period. What are the chances that when the US inspection and US scrutiny or US FDA scrutiny will start again, we could be in for some dismissive action and those FDA manufacturing concerns could come back? Can we take that lightly? Because right now there is no news, so there is a vacuum.
No, you're absolutely right. So at this point of time, what we know is it seems that we have at least 6 months of clear pathway. If not 6 months, it will be 12 months or so. I don't think at any point of time soon that USFDA inspectors are going to start coming to India and start inspecting. Now, at the same time, it's see, we have I don't remember the exact number, but I think 400 odd plants in India, and most of them have undergone multiple rounds of inspection, and most of them have cleared. There are few that are remaining to be cleared. But if you look at those companies as well, they have cleared the inspection elsewhere. So now it is not anymore an uncertain playbook. The companies know how to respond. The companies know what they have to do. And they have gone through the experience in some other plants. So I think it is business as usual, and Indians have adapted to it. And more likely than not, I think there will be positive news coming out once the US FDA starts coming. These plants are later in their cycle, and they will probably get clearances. And the number of warning letters and all will reduce progressively going forward.
Okay, Ravi, great to have you on the show, and as always, a candid chat coming in pharma. But from pharmaceuticals, which is clearly the flavor of the day, let's shift focus now to IT, which has also been quite the darling of T Street.